Hey everyone, welcome back. Today we need to take a look at NIO. Tesla stock has fallen, NIO's fallen, Apple has fallen. Every company share has fallen practically. Well, maybe not everyone. A lot of shares are falling, so we need to have a look at it. Thankfully, we have a video on some much needed information that's going to provide us with some clarity because both Tesla and NIO manufacturers in China, and they've been affected by lockdowns, protests, manufacturing constraints, the expensive lithium battery, a lot of contributing factor to why the market is heading into this direction, seriously. So we got a video to check out first. So we wanna have a look at this.
They were going to shut down for Christmas break anyway for a few days, and they extended the shutdown by a day. And apparently Reuters and the journal reporting that's because they had a wave of COVID infections at their factory, but also their suppliers. So they extended that break for a day. Traditionally, they don't actually take off probably that much time during the holidays, but now they are because of, demand slowing down in China. They actually have increased production
So this is a quick look at Tesla delivery outlook throughout the year, actually. This is very interesting, and this goes back to 2019. What a time that was. Much simpler time it was, actually. Q1, Q2, it was slow start. But ever since then, it's been on a continuous upward trajectory.
At the plant, so they're actually more productive there, so they don't need to be on a lot of those days. I know we're going to come up with NIO, but I think NIO is a big reason why a lot of the shares of these EV makers are down today.
Hold on a minute. You can't just blame it all on NIO. Let's just go back and listen to what he just said.
We come up with NIO, but I think NIO is a big reason why a lot of the shares of these EV makers are down today.
But why? I need a reason why. Well, you know what? Actually, Elon saved himself a lot of money by selling just at the right moment before the ship goes down. It's interesting, isn't it? People were panicking like, why is he selling? Why is he selling? Deep down, he just saved himself a lot of money. It's funny how life works, isn't it? The real question is, are they trying to say that NIO's taken away deliveries, taken away orders from Tesla in China? Because that would be very interesting if people are going to NIO instead of going to Tesla in China. Very interesting.
Yeah, and you have tax loss selling season and all that stuff happening right now. I mean, look, it's down 5% today. People are talking about $100 as support. I mean, it's wild how deep the sell-off has been this month in Tesla in particular. So for sure, this is a stock trending in the wrong direction, for sure.
Yeah, and you mentioned NIO. NIO also coming out this morning and explicitly cutting its production forecast, or delivery forecast, I should say. It now has said it expects to deliver up to 39,500 vehicles in this current quarter. Before this, the lower end was 43,000. So this is quite a cut for NIO also.
Yeah, I had a statement today facing challenges in deliveries and productions, supply chain constraints caused by the outbreak of the Omicron virus, like you mentioned, Jared, that is really hampering their ability right now. But I think a lot of it is still having to do with the fact that, sales are only up 4.5% in December in China. So you're seeing that market slow down to begin with. And then adding on top of that, the reopening and the COVID infection rate kind of rising. I think that's sort of creating this perfect storm right now for them as we enter the end of the year.
Let me go back to Tesla here for a second.
By the way, this is a look at NIO's continuous growth, and it's actually much better than you can ever expect. This is from Q3 of 2020. Q3 of 2020, and that was lockdown era. So considering that they were still delivering over 12,000, and now in comparison they're delivering over 31,000, this company is still growing at a rapid rate. Seriously, at a rapid rate. So why is NIO shares dropping again? Because yes, they cut delivery expectations. So this is how much they cut it by. The company it's now expected to deliver between 38,500 to 39,500 in the fourth quarter. That's this month. Only a few days left. That's down from previous guidance of 43,000 to 48,000. Listen, that's not a huge difference. Back in late 2020, Q3, they were delivering 12,000. They're tripling this amount. Even at 38,000, they're still tripling this amount. Listen, so why is the share falling again? There's a lot of mystery in this for me, because a company that's valued less than 80 billion, because a company that's valued less than 18 billion, a company that's delivering over 100,000 vehicles per year, that doesn't make full sense. Not to mention the majority of their deliveries are in China. What happens when they continue to build out this infrastructure in Europe? What happens when they start delivering thousands of vehicles in Europe? This is too undervalued for NIO. Now, the reason I'm asking why is the share falling again is because last month, November, the shares were also down around the same price, $9, $10. And towards the end of November, the shares actually started to go back up around $13, $12. And the market cap was looking great once again. But now the share price are falling once again. But this is what I'm pondering. This is what I'm trying to understand. For me, it doesn't make full sense. This company still holds a tremendous amount of value within the EV market, a tremendous lead within the EV market. What they're doing, VW is refusing to do. What they're doing, so many legacy automakers are refusing to do. So NIO should not be this undervalued. Don't get me wrong, I don't want to complain too much because I personally love cheap shares, especially when the company is as great as NIO. And it looks like they have a great management because based on their management so far, I think they've been doing tremendous. Unlike some EV startup who've been losing money over and over and over again. NIO is actually innovating. They've installed about 9 different battery swap stations in Europe and they're continually expanding. They unveiled 2 new SUVs. 2 new SUVs, a SUV crossover coupe, which was the EC7, and the big SUV, 6-seater family size SUV, that's the ES8. They're also bringing an ET5 to the UK next year. They're moving forward. They're constantly moving forward. So let me be completely honest. I personally think that NIO is a victim of the entire market because let's be honest, the entire market is doing particularly bad right now. Tesla, we were just talking about Tesla. They've been losing a lot of value. Elon Musk sold out at the right time. So it's not just NIO. Cannot blame this all on NIO. It's not all their fault. It has to do with the entire market. These markets are run by institutional investors. Institutional investors, they get scared when the market is going down and they pull out. So here's another video. Let's check out this one actually.
I'm watching NIO here. Shares dropping as a Chinese EV maker cut its Q4 delivery forecast to a high of 39,500 deliveries from a prior forecast of 48,000. NIO said it's facing challenges to production and supply chain due to the Omicron outbreak. This, of course, coming as China eases its COVID restrictions. Again, we're seeing that good part, the positive part of China. We're going to open up the borders, we're going to ease restrictions, get our companies back full force. But then it's got a high unvaccinated population, so people are getting sick. You're going to see that, I guess, going through until, I guess, early.
So here's my question. What do you think about what they're saying? Because I still think the fact that NIO cut their everyone's cutting delivery expectation. There's no one that's beaten their delivery expectations, especially those companies who are operating in China. Polestar, NIO, Tesla, they're all cutting delivery expectation in China right now because there are economical difficulties. But I definitely think, as usual, the market is overreacting. It is nothing new. The market loves to overreact. But this is perhaps not the best way for NIO to start the new year. 2023 is just around the corner. It's not a good way, but every EV company is in the same situation or similar situation. Polestar is in a similar situation. Tesla is a bit different because they just have Tesla has $20 billion that they can use to do whatever they want, whenever they want. They're not short of cash. And we know the Tesla price going down is mostly temporary. We know that the company will easily recover in the next year, maybe 2 years. So basically, I don't think the reason why the share price is falling is because of NIO's reduction in delivery expectations. I don't think that's the only reason. I think that could be a contributing factor, but it's definitely not the only reason. There's other contributing factor as well. Think about it. The entire market is going down. Tesla, Polestar, Lucid, many companies are losing value. Apple, all companies are in the red. Look at that, S&P 500. Let's have a look at the S&P 500 just before we close out this video. That's the S&P 500 within the last month. Everything is in red. Look at the top right there. The Dow 30, NASDAQ, crude oil, gold, or almost everything is in green. Or almost everything is in red at the moment. Silver is in red. So yeah, I just wanted to say that I don't think you shouldn't panic about the delivery reduction. All companies are doing a similar thing. Just focus on the company's development long term, the good management that they have, the good leadership. I think that'll do. I hope you enjoyed this video today. Thank you for watching. Subscribe to see more, and I will see you in our next one.